Welcome back, everyone. I am absolutely thrilled to have you here for today's explainer. We're looking at a topic today that honestly sounds like it's pulled straight out of a spy novel, but I promise you, it's actually one of the most absolutely crucial elements of our modern world. I want you to imagine, just for a second, that there's this massive, hidden, second banking system operating right next to the regular one. It lends money, it creates credit, it finances businesses. It's this gigantic parallel network quietly humming along right beside the banks you and I use every single day. And it moves money. We're talking massive, mind-boggling amounts of money, trillions of dollars. It's literally a giant machine, quietly turning the gears of global finance right under our noses. But here is the wild paradox. This entire system, it doesn't have neighborhood branches. You're not going to find its ATMs on the corner. You can't just walk in and open a checking account. It manages absolutely enormous, staggering amounts of wealth without a single traditional storefront. And yet, it influences the entire global economy. Honestly, most people have never even heard of it. But when the gears of this invisible machine grind to a halt, or, when things go terribly wrong, everyone, and I mean everyone, feels the consequences for sure. So, Section 1, Unmasking Shadow Banking. And no, it's not a criminal organization. Okay, let's dive into this by clearing up a pretty major misconception. Despite the incredibly mysterious and, let's be real, slightly sinister name, shadow banking doesn't actually mean illegal banking. It's not a cartel. The word shadow really just means that these institutions exist and operate outside the traditional, heavily regulated banking system. They perform banking functions, sure, but they just aren't bound by that same traditional rulebook. Think about your regular run-of-the-mill traditional bank, right? People deposit their money, the bank lends it out, and government regulators are closely monitoring the whole shebang with strict capital requirements and oversight. Now contrast that with the shadow banking world. We're talking about your investment funds, asset managers, special financial vehicles. They are performing those exact same functions, but they're operating under entirely different rules. And together, all of these players form what economists call the shadow banking system. Section 2, Finance's Alternative Highway and why it became so incredibly important. So you might be wondering, why do we even need this? Well, modern economies run on credit. Businesses borrow to expand, investors borrow to buy assets, consumers borrow to buy homes. But traditional banks alone simply couldn't satisfy this explosive, ever-growing demand for credit. Think of it kind of like a bustling, growing city that only has one major highway. It works fine for a while, but eventually the traffic becomes completely overwhelming. Total gridlock sets in. So what happens? New roads appear. The shadow banking system essentially became finance's alternative highway. It helped money move faster and reach entirely new destinations. And for years, pretty much everyone viewed this as a profoundly positive innovation. It provided more flexibility, massive new sources of funding, and vastly more investment opportunities. It really uncorked the bottleneck of traditional finance. Section 3, The Game of Hot Potato, the magic trick of modern finance. And this brilliantly illustrates how this alternative highway actually operates. See, traditional banks usually hold the loans they make on their own books for decades. Shadow banking works totally differently. They package, they trade, they redistribute. Imagine a bank makes thousands of individual loans. Instead of just keeping them, those loans get bundled together into a brand new financial product. That bundle is then sold off to investors. So ownership changes hands, the money gets recycled so even more lending can happen, and the risk gets spread entirely across the system. Now on the surface, this seems incredibly efficient, right? But it creates complexity. Lots and lots of complexity. It is literally like a giant game of hot potato. One person passes the financial potato, then another, then another. These assets are just repeatedly packaged, sold, and transferred. And eventually, nobody really remembers who even started with it in the first place. It becomes insanely difficult to figure out where the actual financial risk ultimately sits. But hey, everything looks perfectly fine when markets are going up and confidence is high. But what happens when panic hits? We all got a very, very painful reminder of this reality during the global financial crisis. So many of these financial products had become so interconnected through just layers and layers of shadow banking transactions that when the confidence finally evaporated, the panic spread like wildfire. Suddenly, everyone is asking frantic questions. Who owns what? Who owes what? Who is actually exposed to these failing loans? And because of all that complexity, sometimes literally nobody had a clear answer. Institutions that weren't even traditional banks suddenly became these massive sources of global instability. Section 4. The Illusion of Risk and why we can't just eliminate it. So, after hearing about all the chaos it can cause, you might be thinking, well, let's just shut the whole thing down. But we actually can't. Shadow banking supplies absolutely essential funding to businesses. It creates vital liquidity in our financial markets, meaning cash flows easily where it needs to go. It offers crucial investment opportunities and supports global economic growth. The harsh reality is, the modern credit machine would literally stall out without it. So the challenge isn't the mere existence of shadow banking. It's how we manage the risks. Because financial innovation is always going to move way faster than government regulation can keep up. And the absolute biggest danger here isn't necessarily the system itself. It's the illusion that the risk has just magically disappeared entirely just because it was bundled up and sold off to someone else. Spreading risk doesn't delete it. Risk rarely vanishes. Instead, it moves. It moves to another institution or another country or a completely different market. Or, most dangerously of all, it moves somewhere people just aren't looking. These hidden connections quietly build up beneath the surface of the global economy. And that is exactly why understanding this invisible highway matters so much. Not because it's completely hidden from view, but because those hidden connections become incredibly important and incredibly dangerous when financial stress hits the system. Shadow banking truly is one of the most powerful forces in modern finance. It is everywhere, yet most of us never even notice it until something breaks. So I want to leave you with this final thought to ponder today. In finance, risk rarely vanishes. It usually moves. Next time you hear about a booming market or a crazy new financial trend, ask yourself, where did the risk move to this time? If you enjoyed uncovering the hidden systems behind money, markets, and the global economy with us, be sure to subscribe and turn on notifications for more explainers. I will see you in the next one.